What's up, YouTube? FD White back with a special episode. We have a special guest. Me and this guy has been talking for a few months. We finally got to doing this interview slash collab. So without further ado, I don't want to, I want to bring him straight up and get right into it because we have limited time. I know he wants to get back to the charts. We got my man CVO. How you doing, CVO?
Hey, buddy, doing well. Thanks for having me. I've been looking forward to our discussion for quite some time. I know you've been doing some traveling, so good to have you back in the States. And yeah, interested to just kind of bounce some ideas off each other, man, and take a look at some charts, some high time frame analysis, current state, all the goodies.
Cool. Yeah, man, definitely, man. It's definitely you've been one of my go-to guys for TA, man. It's only a few guys that I really would suggest watching for TA. You're one of them. You're definitely up there, man. So thank you
I
for
appreciate it,
everything that
man.
you do. So without further ado, let's just jump right into it, man. The state of the market is very choppy right now. And the first thing I want to know is I want to get your take on what do you think we are in this cycle? Because we've been talking about a whole nother cycle that not too many people are talking about. But as far as the 4-year cycle, are you still going with that, or where do you see us right now in this market cycle for crypto?
Yeah. So, just for anybody that, isn't familiar with myself, right? So I've been, trading, investing with crypto specifically since 2017 is kind of when I got, into everything. 2020, I would say like 2019, 2018, right after that, really huge bull run in 2017. And then you had the bear market after that. I really feel like is when the 4-year cycle got like kind of, put into, not really put into play, but I think that's when everybody kind of really started to notice it, or others had like really good reasoning behind the analysis behind it, right? We had data
Right.
points that you could like make a case that was, obviously the thing. And then even into the 2021 time frame, it pretty much stayed the course, right? We had almost exactly that. You had the year, of the halving in 2020, and then basically 15 months later, you had a top, which was, pretty spot on, right, as far as that would go. Personally, I've kind of put like a lot, now that that's like been so up in everyone's face, I guess you could say, or like very, very brought to light or surface level. Like I try to stay away personally from things that, and I've been burned by these things in the past. And
Yeah.
trust me when I say I was a huge 4-year cycle guy in the past. I used to look to all the previous, highs and everything that like kind of most people are doing today, even still, right? But what I started doing a long time ago is I really wanted to try to not necessarily be a huge contrarian, but just look
Mhm.
for different things, right? Something
Right.
that most people aren't looking for yet. Because if you were the first guy to note the 4-year cycle back in the day, then hey, you did pretty well up until whatever. But when that breaks eventually, and generally speaking, when everyone is looking for one thing, that's when it breaks, right? So personally, when I'm asked about the 4-year cycle at this point, I don't really subscribe to it anymore in the sense of the same way that everybody else would. And I think that there's already been, key points that have kind of shown that I think that's kind of, over with as far
Mhm.
as what it used to be. Right. And the first two key points were, um, or I guess the biggest one being that, you hadn't seen a new all-time high
Yep.
before the halving. Obviously we got that, right? Previous time frames, when we would make a new all-time high as well, the price would continue, and we've not really seen that quite yet, and we've been living
Mhm.
well below the last all-time high, that 69K, right, from 2021 for some time. We've dipped below it several times already, and in my opinion it's just more beneficial or more. I just take a different approach to it, and I just approach it as I would looking at like the stock market or any other kind of assets that are trillion-dollar assets now. And I bring that up because it's like you're not, granted, yes, we have some really big time frame,
Yep.
market cycles. Like I'm going to cover an idea in this video too on like the housing market. But as far as like the smaller time frame, these couple years, like you don't really hear every move up and every move down in the stock market. You don't hear everybody being like, it's the bear market, it's the bull market, it's the bear
Right.
market, it's over. You will have people who being like, oh, we're due for a big depression, corrections, and all that stuff.
Yeah.
But, it's just a different world. Like in crypto, it's like everybody's so glued to that 4-year cycle. So
Yeah.
to answer the question, I guess like I don't necessarily subscribe to it. And I just kind of take more of a, shorter outlook, approach to it. Like I'm looking for the next couple months and weeks,
Yep.
on certain things in the chart that's going to maybe allude to, something coming up, one of which being recently literally at the high at 70, 2,000 just about, I was able to identify a huge reversal pattern that took
Yep.
Bitcoin back down to like 54,000, right? And at the time, all the news was super exciting, all these things, and you would think that would be almost impossible. And then 6 weeks forward, obviously, the targets were met and stuff like that. So, in the sense of like where we are in a cycle, I think that it's hard to put it into a pinpoint for a 4-year time frame. And one thing I guess I really want to like kind of cover the idea of is that I think that we're potentially witnessing the first 20-year cycle, 18 to 20 year, on crypto being formed, right? So
Okay.
alongside the housing market cycle is kind of like where, and with that being said, then the stock market, everything kind of rises together in that sense. Like, so hope that answers that question.
Yeah, definitely. So that's definitely one thing I want to because that's why I didn't ask you about it when we were just talking back and forth. I wanted to come here and really digest what you're saying along with with the viewers. So let's backtrack a little bit, just a quick overview because a lot of people always want to know people's genesis, people's story. So quickly, how did you really like start to get into crypto? How did you get into trading? Was it like something that me, I come from trading a little bit, but I come from Forex. That's where I really learned how to trade, but I was an investor of crypto first. So how did you get into crypto or get into the investing world and the trading world? Or do you even invest, or are you just a trader?
Yeah, no. So, going back to 2017 pretty much is okay. So the very first thing that got me into crypto and came across Bitcoin
Mhm.
was way back in like 2011, but I did not buy Bitcoin at the time
Right.
because I couldn't figure out how to do it. It was so hard and just sketchy, right? So, and what I did was literally it was like my father-in-law at the time, or soon to be father-in-law. He was discussing the Iraqi dinar. Like he literally came across this on like NPR radio that the Iraqi dinar was going to revalue or something like that, and like $1,000 US was gonna 100x basically. So you buy like $1,000 of the
Yeah.
dinar, whatever, and like I'm like in college at this point, 2011, whatever, like young kid, whatever, doing my thing. And so of course I'm googling, and once again 2010, 2011, Google, YouTube was not, it was VHS version of the internet, like even then, which is kind of crazy to think. But
Exactly.
I would be searching up currency and all this stuff like pretty much every day, kind of waiting for this to occur. And eventually I stumbled upon, Bitcoin, digital
Yep.
currency, and, got really into, what it was and how it was being utilized. And I was like, all right, that sounds, it was like 6 cents, man, like, in the realm of like 6 cents to, under $1 still. And couldn't really figure out how to buy it. And everywhere you went, it was kind of like everybody was pointing to like the Silk Road stuff. So it was very like sketchy. Right. And
Sketchy.
I was like,
Yep.
I don't know anybody that, knows anything about it. I couldn't figure out how to do it. So I just kind of bypassed it. Fast forward like years later, the Iraqi dinar did never give me $1 million return, by the way. But
Right.
yeah, my $1,000, if I would have put it in Bitcoin that day, man, it would have been
Oh
a great
man,
return.
we
But
probably would be having a totally different conversation right
yeah,
now.
I wouldn't have held it though, man. Like that's the thing, right? I was glued to that every single day. The second that would have hit, a 10x, I would have
Yeah.
been grateful at
Right.
the time, right? So
Right.
that's when people always say that stuff too, where it's like, oh, if I would have
Yeah.
done this, I'm like, you wouldn't have held it, like you would have
Nah.
sold it, and you would have sold it at like the lows usually, more than anything.
Hmm.
But yeah, so fast forward 2017, Bitcoin, everything started making its rounds, really, heavily in the media and everything like that. And so it caught my attention again. And like, I've already, kind of kept up with it. But at this point I was like, all right, let me see what this is all about, whatever. And I went down the rabbit hole, all the Reddits and whatever. And it was January of 2017. And at the time you could only invest in Bitcoin, Ethereum, and Litecoin. Bitcoin was like $600. Once again, January 2017. Ethereum was $20, and Litecoin was 3.
Wow.
So I ended up doing what most people do and go for the cheap one because you can get the most bang for your
Yep.
buck, and threw a couple thousand into Litecoin. And I didn't, I wasn't looking to day trade, nothing like that. At that point in time, you didn't even need to, or even have the idea to at that point. But I ended up just holding that like the whole year, and obviously watching it, explode. Ended up doing like 100x right by the end of the year, December. So at that point, you're seeing all the XRPs and the Trons and the Sia coins and all the big boys, right? Verge, and you got all the things going on. And so I ended up like cashing out of that and then moving it all to Binance. And once again, you're talking like a stupid amount that I look back on and I just like laugh that at this point.
Right.
But I took X amount, I 100x'd it, I took it and I dumped it all into Tron, XRP, and like a couple other just random ones. But Tron and XRP were like pretty much half and half of it. And that was like 70 cent XRP before it went to 3, so like 3x'd overnight, and then the Tron investment basically like 30x'd, so you're talking about something that was already up 100x that's like 2xing now and 30xing and going all over the place. And at the time, now it's the peak of 2017. The market's about to, dump. Obviously, we don't know that. And the exchanges were so like crashing and you couldn't even get into them for days. By the time I did, everything was down 50% from the high. I was still extremely up, but of course, greed, and you just don't know. Like, it's just like, oh, I'll wait for it to go back, and then I'll cash out. Because I did all the math in my head, I knew what the accounts got up to, and I was like, oh, if it gets back to that, I'll just cash out, whatever, all
that's it. That's the one right there. The
famous last word.
Yeah.
So long story short, ended up, obviously that was the beginning of the 2018 bear market, and just watched it all go all in. I started trying to move it. I bought tops, I'm selling bottoms, I'm doing all the wrong things. All the news was exciting. Like, there was no reason that Bitcoin should have went down 80% or Ethereum or all these altcoins. And I basically got back to my initial investment that I put into Litecoin in January of the year before, right? Of Litecoin. So I basically like put it all back into my Litecoin position, and I put that on a ledger, and it's just like kind of just been chilling off to the side. And I decided, I was like, you know what? I need to learn, the ins and outs of the market so that I can identify these things without having to rely on like the news or like just, understand. I just needed to understand the market dynamics a little bit better. So I just started, studying technical analysis, very simple stuff, just, self-taught for the most part on YouTube, and then joined a couple of guys' groups, and then, partnered up with other people and just kind of learned, and evolved along the way. And as of like the last few years, now that we've gotten to the point where like the market's evolved enough, like where we're not getting those explosive 100x moves all the time out of altcoins and stuff. And you occasionally still get some winners, don't get me wrong, but it's nothing like it was. You now have a market that's it's not hugely evolved and, like a immature like the stock market, but you can definitely trade, daily. At least the high caps, Bitcoin, Ethereum, whatever, with certain strategy. And that's kind of what I focus on now. Is I pretty much just, I daily will be trading for the most part, Bitcoin and Ethereum. And then I look for key levels on the altcoins and Bitcoin, Ethereum as well for some more mid to long-term plays. So it's, definitely still investing in the long-term. But while we're getting a lot of, 6 months of sideways action, for the last couple of months, it's probably been boring to most. And maybe even people have lost, funds on some of the, big pullbacks and panic selling and doing all those things. But I try to attack the short-term time frame stuff on some shorter-term trades, and then look for investment opportunities across the board pretty much.
A lot of people's stories who've been in crypto maybe like 3, 4 years, 3, 4, 5 years, we pretty much have a similar story. We invested, rolled it all the way up, and then basically rolled it all the way down. So a lot of us have a little bit. I use that in order to, now I'm taking profits. And I learned how to trade right before the bear market of 2022 started, because I'm like looking at all the metrics, looking at everything. I still want to figure out how to make money in between these, market cycles, the bear market and the bull market. So I definitely second your sentiment when it comes to that. So let's talk about this theory that we've been holding out on, man. So you've been talking about this 20-year theory that has something to do with real estate, and real estate, trickles on to the different markets. Can you explain what do you see, and how does that correlate to other markets? I'll just let you take the wheel and go from here.
Yeah, so let me see if I can share this little presentation thing real quick. And and I just have, it's just a little easy visual, I guess, that can pop up here, right? So sorry, the only way I can bring it up is kind of over in Discord here. I couldn't put it on a chart, but
that's fine.
Yeah. So essentially, this is not like the 20-year housing market cycle is not my analysis that I've, formulated by any means by myself or anything. There's many other analysts that have, conducted this. There's a book by Philip Anderson called The Secret Life of Banks and Stocks, or Secret Life of Banking and Real Estate, that kind of covers it really well. But what I found is this super simple line chart. And obviously, it's not just a simple straight up a pullback. It's obviously big time frames that go into this. These are 20-year averages. So mind you that, this could be 1 to 5 years off, right? This could be a 16-year time period one time and a 21 time, the next. But overall, in general, what you get at, what I'm pointing at here is the housing market itself, which I think is very correlated to, potentially at least, what we're about to witness with crypto, and then as well as the stock market as well, right? Because they'll all most likely continue up together. And the really simple outlook of this is that you get a initial 7 to 10 year. I know it says 7 years, 7 years, 4 years. It's not always exact like this. So it's generally a 7 to 10 year run up, about a 2 to 4 year sideways consolidation that generally induces uncertainty, some fear. You get high interest rates, high inflation. Everybody expects a recession, right at the low, pretty much, and then you get a 4 to 7 year, for lack of a better term, a face melting rally, right? Like something that's like, you get this initial rise and everything seems amazing, but this second rise is incredible. And through history, it's just been, really just phenomenal. And here it even has a couple of the years that, went into play, right? And I've done a lot of research into this. Obviously, everybody can do their own, but in theory, right, these 4 iterations I think are very interesting, right? So you got 1955, so essentially the 60s, right? You get a nice little 7 to 10 year rally into this region. There's always a black swan event, right? So once again, 7 to 10 years up, black swan event, 2 to 4 years sideways. Everybody expects recession, high interest rates, high inflation, and then you get the finale, basically. So in the 60s, essentially, you got this run up right here. Black swan was a Cuban Missile Crisis. A couple years go by, right? And same thing, high interest rates, high inflation. Everybody expected a recession till the final leg of the rally up to the 1972. You get a few years decline and then you restart, right? So now in 1975, essentially the 80s, I always just kind of refer to it in simple numbers there. But you get the 7 to 10 year rally. Your black swan event is the Gulf War. All right, a couple years of consolidation, high interest rates, high inflation. Everybody expects a recession. Obviously, the finale up to about 1989, reset, come back. 1993. These next 2 iterations are very familiar, I hope, or at least will make sense to some people, or it kind of be like a little wild, right? So 1993, 7 to 10 year rally, you get to the upside. 2001 is our black swan event, right? Anything come to mind from 2001?
Oh yeah, 2000, the Twin Towers.
Yep, exactly. So you got 9/11 here, basically 2 years of sideways consolidation. So an end of 2003, what did we have? You had a new conflict. I'm trying not to say any kind of crazy words, but
right.
you had issues across the board, right? And you had the .com bubble popping at that time, right? So at that area, you had high interest rates, once again being introduced, high inflation being introduced, and you had everybody expecting more downside, right? And a recession, depression to come with it. What'd you get? 5 years of upside. I know this says 2007, but obviously 2008. We are all familiar with that, right? So then you get this, restart. And then now 2011 comes into play, which is, in my theory, where the Bitcoin price action was also, born, that we could be witnessing this first kind of like 18 to 20 year cycle in crypto alongside the housing market. So once again, you got a 2011 restart time, 7 to 10 years go by. What's that put us to,
about 18, 19, 20. Yep.
Yep. So we had, big pandemic, basically a couple years go by. This one was a little bit more lengthier. 2023 though, right? Like, so I made my last major update on this theory. I made it in September of last year, 2023. And if you remember last year, that was right before the end of the year came, and we had basically, this huge rally that is, superseded. And as far as like stocks go and everything like that, we already had a pretty decent rally going on throughout the year, but the end of the year last year got a little dicey, right? And so anyways, you got the run up 7 to 10 years. We got the 2020 timeframe, 3 years later, call it even 4 if you wanted to before this year. But what did we start off with this year, or definitely had feared going into 2023 and mid 2023? High interest rates, high inflation. Everybody expected a recession. And what have we been in the midst of so far, right? Pretty much this potentially the big, final leg here that goes 5 to 7 years, right? So once again, it's not an exact science, obviously, and it's just one of those things where it's something I've kept in the back of my mind. You know, it's more so like the end of this decade, potentially even like 2025, 2026 present, you know, certain timeframes where this could, you know, potentially start peaking out. So it's just something that is interesting alongside with the housing market that, you know, does put that time frame into like, you know, 2028, 2029, right? Like as far as like the average area. And then what's interesting about that is that at that point as well, you have, you know, 100-year cyclical event from the Great Depression back in 1929. And if you actually look back into the 1920s, it's very interesting because that whole decade,
the Roaring '20s,
is pretty much what we're doing now, right? So it's like start off with a pandemic, huge boom in construction, all-time highs reached for the, you know, all markets across the board, only to end, you know, at the end of you know, the decade with some demise. So it's kind of like been the ongoing, you know, idea here, and even like to the point of like you know, things with the election that have just been kind of like a little weird, you know, back in 2020, and then even now, and it's just like it's just been an interesting thing that, like, in my opinion, just data wise kind of correlates to a lot of things. It kind of shows like that, you know, the news doesn't matter, and I don't know, it's just it's an interesting concept.
So you're in the camp that the charts precede the news, or the technicals precede the fundamentals, as opposed to the fundamentals above the technicals.
Yeah, I you know, in my opinion and in my experience, I think that, you know, the fund, you know, and I'm just, there's so many ways to invest and to trade, and there's no right way, right? Like there doesn't seem to be one right way.
Right.
You know, you can either be all in on fundamentals, you can either be all in on technicals, and you put all your focus and energy there, or you can be a little bit of both, which I don't know how anybody does that in a successful manner, because it's just there's so, like, the amount of time I put in just to charts, sometimes it's just Bitcoin and Ethereum, like, that's without even looking at the altcoins and everything like that. But you know, it's a full-time job, is, you know, it is the way I dissect it. And then if you're going to try to interpret, you know, the CPI and the PPI, and I'll be honest with you, I don't even know what those two things mean. I know what they mean, obviously, like at a high level, but I couldn't have a deep conversation about those numbers and how they'll you know, affect the market. And you know, it's because I just feel like they don't, right? I know that, like, the timing of the release of them, you know, generally is accompanied with some moves in the market, but in, you know, if you can position yourself accordingly before that, it really shouldn't affect you. But to answer your question, yeah, I tend to go more so on the technical side, because I don't feel like you can adequately, you know, trade news or fundamentals sometimes. And the reason being is because at times, like, you know, SEC with XRP, for example, out of nowhere, you'll get a lawsuit that's either hitting them or dropping, you know, and, like, you know, how can you trade that, or how can you, you know, build that into your investment strategy? And then look at how the news was a nothing burger when that got dropped last week. You know, it's just like, it doesn't really, and for me, looking at those assets, it doesn't really change anything. So yeah, I definitely tend to look more to the the technicals, and then the fundamentals for sure.
So I'm gonna throw you a curveball. So with so you can't deny that right now we're on unstable times with the economy, with geopolitics, with, you know, our monetary system and things like that. So you how do you navigate it from just a technical you know, just a technical way and not a fundamental way? Because knowing, you know, these fundamentals may, like you said, some news may come out, we might get a spike up, then a spike down, then we might just go back to the mean or something like that. So how do you navigate these black swans, or you just totally disregard them and strictly stay with the charts? That's what you're saying.
So I wouldn't say I disregard them, but I do want to show a good example, right, of just a current note, right? So, like, let's see, it's currently what, August 13th, right? So it feels like there's always some crazy news going on, right? But, like, you know, just you know, I'll back us up about 2 months ago to July 11th, right? And you know, basically, this is a pattern, by the way, that just is, like, you know, one of many, you know, aspects to the way I trade, right? And generally, I utilize, you know, range data based on volume, you know, high time frame averages of price, and, you know, certain, like, it's a little bit of a, you know, a bunch of things that are kind of compiled together, right? So, but for the recent price action, for example, just in the stock market, all right, we had, you know, about a 10% pullback recently, about a week ago, when we were coming into $562, which this is the SPY, which is the ETF that, basically monitors the S&P 500. So in general, this is just 1 0 less than the S&P 500, right? The S&P is probably sitting about, this topped at 560. The S&P was at 5,600, right?
Right.
Huge bearish pattern got put in place right here. And this is a bearish harmonic pattern, which is basically a sequence of Fibonacci's. They have specific rules to them. It's not perfect by any means. It's not like, these definitely can fail and all these things, but it gives you a good indication when you're coming into key levels to kind of be aware of, right? So it's, for example, like I wouldn't have been buying anything at, this time frame in the stock market because I had, a higher probability that we were going to see a pullback. And what this pattern alludes to is a 1618 expansion. So if you're familiar with like fibs, right? Like basically from this X leg, which is essentially the high from 2021 to the low that we put in October 2022, this is 106 or 1.618 expansion to the upside. So just like golden pockets where you look for those, key reversals and things like that, key expansions, both up and down, come in at those 618 expansions with an additional 100%. So, this is a super bullish pattern on the way up. Very exciting. Seems like it'll never end. But it definitely did come into contact right here, had a very bearish reaction from this. And, I posted on Twitter and then obviously in my trading group and community very frequently before this time frame. But it was July 11th, right? And I was like, I'm not a news guy, but I remember we're about to have some bad news, right? And I posted this pattern with literally this arrow. I mean, as simple as it can get. Because this is the targets back down to this X point. You got a 382 Fibonacci, and once again, just pulled from low to high, simple stuff. And then the gold pockets down here with a couple of high time frame averages. Three key levels that I'm looking at. Obviously, we got a bounce so far. Could that be the low? Could be, but as long as we're down below the high at the moment, I still kind of just imagine this is going to come up for a lower high. We roll over. Now, what was going on at this time, right? Yes, we've always, or like the last year and a half, we've kind of always been at this like edge of our seat on global issues, I guess, right? But since then, it's been just a ton of things have rolled over, right? You had that carry trade recently. You had this was actually 2 days right before a candidate that's in the running, had a very specific issue on a Saturday afternoon, right? So, and I honestly thought that I was like, man, that's wild to see. This was 2 days before that, and I'm like, I thought that if that would have went a different way, like, markets might have seen a bigger pullback. But the S&P 500 had this pattern, as well as the NASDAQ, right? And I haven't moved this, I haven't done anything to this. And once again, I posted these at the high, not in hindsight. This literally to the day was on, like I said, you can see
July 11,
July 11, right at 20,000, and still looking for some more downside here. So, not that I see these things and I'm like, man, a black swan event is coming, but I just look for key areas and same in reverse, right? Like when we were at $23,000 Bitcoin on 9/11 last year. Only reason I remember that is because I was doing an interview with somebody else at the time, but we were looking for some key points to at least take us, up to 30,000, and you can kind of start, evaluating as you go. And it's another thing too, is like, the new data coming in is like something you have to constantly evaluate, as I'm sure you can agree to as well. Like even right now, even though I have targets to the downside here, things could change. This could totally have been, the low and what have you. But at the moment, the data given still points, to the downside for this. Now looking at Bitcoin, right? Let's kind of keep this ball rolling. Sorry, you might have to head out this little drag. But, as far as Bitcoin goes, we had this huge rally up to the upside. And once again, you had all this price action up here. And I'll be honest, so Bitcoin didn't really give me a huge sign of kind of weakness or reversal up until this point. All right. So, and this was now in May, right? So March came and May was down here when at least I identified something that kind of, showed me that we at least come down to this $55,000, $54,000 area. All right. And then once again, this is just a high time frame reversal pattern, one of those harmonics. Once again, it's called the bearish shark, right? So it comes right back up. Perfect height here. A couple of targets, which took 6 weeks to unfold, right? So it's just a game of patience at that point. But we came right into them. All right. And then from there, did I still anticipate downside? I did, but once again, you had to reevaluate, as we
Yep.
got the new data. So at this point now we were in a new quarter, right? So when looking at, once again, the range data based on volume, I was able to identify that we had a new quarterly range here. So what did we do, right? We came back into the region, boom. What are we targeting? Back to the naked point of control, or the point of control, the highest traded volume spot on the chart, topped out basically right at the high of the range. And then we nuked it, right? Now, when we came into this piece, there was one thing that had me very cautious on the market, and it wasn't Bitcoin. It was actually Ethereum. And Ethereum was even before this was giving me 50% pullback potential. And this was when we were at $4,000 ETH. And this was actually something I'd been monitoring for the better part of 2 years. So it's almost what kind of forced me to really be keeping an eye out for Bitcoin for some of these reversal patterns. And what it was, I'll switch over to that really quickly, is as we came in, or basically, we created this huge pattern over the course of 2 years. This was obviously 2022, March, the low in June of 22, our high or low. And then we came up to $4,000. And then once again, if you went straight fundamentals on your investment strategies the last few months, and say you were out of Ethereum, or you're just walking into this market, what would most people have probably been doing the last few weeks, right? Like when we came up to both these two peaks, it was the euphoric news, right? An ETF for Ethereum was about to be launched. I think it actually did launch here. It did. So once again, high Ethereum, the height of that was news at the time. But this pattern kind of kept me grounded. And what this is very similar to the one I just showed you on the stock market, but this has a very specific target, and it's back to this B point. It took a hot minute to get there, about 5 months, but you can see where we came down and bounced off of, right?
Yep.
It was just
perfectly bounced. Yep.
It was, and it's something that, looking back now on this, it seems like, oh, okay, cool, that was a simple thing. But living that out over the last several months, right? And just trying to decide, all right, do I, for personally, I don't want anybody taking, any advice from me. I'm not a financial advisor. I'm not trying to tell you how to invest your money. But for me personally, to manage this across the way, it's not the easiest thing in the world when, it seems like the rest of the world is oh, we're going up, and we saw this huge, ETF boom out of Bitcoin. Why wouldn't we see it in ETH? And ETH has been lagging, and all these things, right? So, all that to say, I collectively kind of look at the markets a little bit with the stock market. I don't trade the stock market daily or anything, but I will look to it to just kind of see confluences with some of those high time frame patterns. And basically we had this one on ETH, which has been eyeball in my face the whole year basically. Bitcoin started putting in some high time frame turns, and then stock market. So for me right now, I genuinely feel that we have more downside in the market because of the stock market, honestly, because if we do pull back another to those areas I was just looking at on the SPY and the NASDAQ, that's another 10% pullback. Yep. And we only pulled back 10% the first time when you saw 74K Bitcoin down to 48. So where does that lead us? Who knows at the moment. But yeah, that's kind of how I gauge the market on my higher time frame. And then obviously shorter time for daily, there's always a setup.
So, right.
Increasing, because even today, right? I took a pretty good long, from 58K to 61K, right? It's just, but that was my target. So I'm not looking to hold that to new all-time highs or anything quite yet. So there's definitely many ways to kind of approach the market.
Definitely. So I do want to usually ask everybody who comes on the channel. I don't really like asking predictions, but where do you see Bitcoin going within the next year? I know you said you're still looking for a little bit more downside, which I am too. And I come to that conclusion through different metrics, but I do also see a nice strong bounce at some point. Where do you see the market going within the next let's say 6 to 12 months? Not a prediction, just like a hunch, maybe. What do you think?
Yeah. So for Bitcoin, like you said, barring the pullback, I guess, to see wherever that lands us. And my idea at the moment is kind of wrapped around this thesis where not because of the news, but I do think forward, I guess, some big events coming up, because once again, just like we were looking at that housing market cycle,
Right.
you know, you get those mid cycle slowdowns, and it's always met with a reason, right? So when people look back, you know, quickly, I'm looking at certain things, and unless you really have those dates like in your mind, like you're going to look back and just look at data. But when you're living that moment, you know, the news is today's excuse, is what I always kind of say, right? So,
right.
And thinking forward, you know, I think the election time frame, and being that it's Q4, right? Like generally, we always get, everybody always loves to come up with, you know, October and Govember, and I don't know, they save for
December
December
rally, the Christmas rally, and all that.
Rally, yeah, exactly. So, you know, and so far this year, you know, hasn't really barred from that setup, because generally what you get is a sell in May, walk away. Obviously, it wasn't like May 1st, but if you would have sold in May, you probably are doing okay, like in a sense, right? Like, and in theory, I still anticipate maybe throughout this month, August, throughout September as well, we pull back. 42 to 43,000 is a really big area that I'm looking at the moment. Like I said, as always, things can change, but the propelled move off of that, I would say, you know, maybe in 2025, or, you know, a year from now, what have you, I definitely target like past 100K. You know, I'm thinking that, you know, my target for Bitcoin for the next, at least at the moment, and as always, like we were just saying, like, you know, if it was a hunch, you know, it's 100 to 130 is my little window.
Same here.
It's just how low will we go, or how are we going to get? It's always the road to get there, right? Is the question at this point. So, but you know, I do foresee that, you know, that being the next move up, and seeing how we just shot up so pretty much straight. I know that anybody in the market the last 6 months seemed bored out of their mind.
Yeah.
It's kind of crazy that we consider $60,900 Bitcoin,
right?
Because you know
where we came from.
Right. And but you always will be, right? Like if we got to 100K tomorrow in a week, it'd be boring at that point, right? It's like, all right, what's next? What's next? But you shot up from 15K to 74K in basically 15 months. And some would argue that was a blow off top in a sense, right? So that's what like is just, we're kind of unraveling that move right now. But yes, the next move up, I do foresee, you know, 100 to 130 kind of being that little area for Bitcoin.
Okay. Yeah. So before we get out of here, I wanna give my give the audience like a warning. Like, where do you see us waving the red flags? What price point that we have to break in order for you to start getting concerned about the market for Bitcoin?
Concerned. So here's the only, or a issue, I guess, with that statement, right? Is like, what constitutes concerned? Because like, you know, does that mean just like we won't see new all-time highs in the next year, and we're going to be going through like another elongated, like flat to bear market, like kind of deal?
Yeah, you like something like a blow off top back to bear market for a few years type level, or do you think it depends on what happens in the overall economy? But you say you're not a fundamental person, so I want to, from a technical standpoint,
on a technical idea, I would say if we lose 44,000, and you know, like I said, I target like 42, 43, and that's just like, you know, within a few days we punch down to that, and then we kind of recover 44. But losing 44,000 would probably not bode well, and in my opinion. And at that point, I think you have to start almost revisiting like 20K scenarios, and then I can't imagine that we would just jet from 20 to 100 quickly, right? So at that point, I think we'd be in a scenario where, you know, it's taken us this long, 6 months already, just to get down to 48, whatever we got to recently. You know, if we got another huge drop, something along those lines, I mean, it would probably be over the course of the next few months. I mean, we'd probably be, in my eyes, I mean, it would be one of those situations where you'd look back and be like, oh, we've already been in the bear market for a year.
Yeah, that's like, how it always is. Yeah.
But yeah, for me, it's really like 40. I'd really like to see 44 if we come down that low, hold to just kind of give that next projection up. Otherwise, I think we probably do have, you know, a little bit more time down below, you know, these regions. So that's kind of where I'd look to.
Cool, man. CVO, man, like, you know, I want to take up too much of your time, man. I want to get back to these charts too, man. I appreciate you. I really only want to bring on people who I'm going to learn from. That's the only way I have guests on my channel. I want to learn more, so I bring on people who I can learn from. And you were one of the top people who came to mind. So, man, I appreciate you coming on.
No, absolutely. It's an honor to be here, man. I really love your content, love everything you're doing, love the energy that you bring to the space too. Somebody who's kind of like, constantly uplifting. I think that that's a rarity. And like you said, like someone that we can almost kind of bounce ideas off of and learn from, as a unit. So I really enjoy that. Appreciate what you're doing. And I'd love to be back, again soon, man.
Yeah. So tell the people what you got going really quick and where they can find you.
Yeah. So, basically the largest audience for me is on TikTok. I do daily live streams there. I put out daily content there. And then generally I have, the YouTube channel as well, where I put up things. I have a Discord trading community where I put, all my analysis, daily trade setups, mid to long-term plays, all the goodies. And you can pretty much find everything on my Twitter. It's like we got the like link tree in the bio there. So CVO _crypto, easiest way. Follow on Twitter as well. We have some fun there. But yeah, other than that, just kind of a little bit of everywhere.
Cool, man. We definitely put your link down below. And like I said, I appreciate you coming, and we will be in touch. We talking all the time on Twitter and everything. So we're X.
Absolutely.
So I'll talk to you in a minute. Thank you for coming, man. Peace.
Take it easy. Bye, everybody.